Welcome to the weekly market wrap-up. I'm Hannah Bernard. It was an exciting week in the markets as the S&P 500 notched its first ever finish above 2,000. A mega fast food merger caused waves on both sides of the border, and an iconic electronics retailer staved off bankruptcy. There's a lot to unpack, so let's get to it. Market action turned tepid late in the week as investors slept off the party hangover after hitting all-time highs on Tuesday. The Dow Jones Industrial Average slipped 42 points on Thursday to close at 17,079, and the S&P 500 slid slightly under the 2,000 mark, which it penetrated for the first time on Tuesday. The 500 Club lost 3.38 points Thursday to close at 1,996. And finally, the Nasdaq fell nearly 12 points Thursday to close at 4,557. Now let's turn to Canadian markets, which saw the TSX break an all-time record high earlier in the week, only to then falter after some disappointing earning results. The Toronto Stock Exchange declined on Thursday as shares of Toronto-Dominion Bank and Canadian Imperial Bank of Commerce fell after the two lenders reported poor quarterly results. The TSX dropped 44.48 points to close at 15,558. The TSX Venture Exchange, however, posted gains on Thursday, up just over 3 points to close at 1,022. Now, the big story in both Canada and the US this week was the news that Burger King is snapping up Canadian coffee icon Tim Hortons in a $12.5 billion deal. The merger creates the world's third largest fast food restaurant company, with more than 18,000 outlets in 100 countries and about $22 billion in system sales. The deal could allow Tim Hortons to accelerate its growth in international markets, including the US. Timmy's is saturated in Canada with 3,600 outlets, but its US penetration is dismal with about 800 locations. Wall Street welcomed the deal Monday on news Burger King's shares shot up 19.5% or $5.29 to close at $32.40. Tim Hortons shares also skyrocketed, gaining nearly 19% or $11.88 to close at $74.72. The combined company will be based in Canada, with Burger King moving its worldwide headquarters north of the border. In the US, lawmakers and consumers are in an uproar over the multi-billion-dollar company fleeing in an apparent attempt to avoid paying higher US corporate taxes, a tactic called inversion. While in Canada, pushback stems from worry over the American takeover of an iconic Canadian brand and the possibility that Timmy's could lose some of its hometown character. Time will tell if this deal hurts or helps both companies. Our only advice to Tim Hortons is to keep its coffee exclusive to Timmy's. It would be a mistake to allow Burger King to carry the Tim Hortons blend. Now to winners and losers and our picks for the week. The winner for this week is actually almost for every day of this week, is Radio Shack Corporation, ticker symbol RSH. Radio Shack shares soared for a third day in a row Thursday, skyrocketing 31%. This on top of a 27% jump on Wednesday and a 19% bump on Tuesday. All this following a Bloomberg report that the beleaguered electronics retailer is being thrown a lifeline by its shareholder, Standard General. Radio Shack has undertaken several strategic moves of late to stave off bankruptcy, but nothing has worked. The chain has lost $98.3 million in Q1 2015, and its adjusted operating loss soared by a whopping 700% over the prior year quarter. Without the hedge fund's rescue financing, Radio Shack's days could have been numbered. The loser for this week is Smith & Wesson Holding Corp., ticker symbol SWHC. Shares in the legendary gunmaker dropped on Wednesday, falling nearly 14% after the company slashed its full-year sales and profit forecasts. It was the stock's biggest decline in more than 2 years. Plummeting sales of assault-styled weapons, also known as modern sporting rifles or black rifles, has led to an oversupply of unsold guns and is hitting the bottom lines of the big arms producers like Smith & Wesson. The assault weapon market has softened because of the concern that federal lawmakers would tighten gun laws in the wake of the Sandy Hook school massacre has waned, and with it, the rush for firearms is ebbing too. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week, which, by the way, is a short week as markets are closed for Labor Day, so let's get started. Here are 3 U.S. stocks to watch. First up on Tuesday is Conn's Inc. with an EPS forecast of 74 cents compared to 52 cents in the prior year quarter. Next up on Wednesday is H&R Block Inc. with an EPS forecast for a loss of 41 cents compared to a loss of 40 cents in the prior year quarter. The tax preparation concern also joined the ranks of stocks hitting 52-week highs this week, reaching $33.92. Finally, on Thursday is Quicksilver Inc. with an EPS forecast of 86 cents compared to $1.70 in the prior year quarter. Now here are 3 Canadian stocks to watch next week. First up on Wednesday is Dominion Diamond Corporation with an EPS forecast of 22 cents compared to 13 cents in the prior year quarter. In July, Dominion issued an updated mining plan for its Ikatai diamond mine in the Northwest Territories, including current estimates for anticipated annual production by pipe with associated operating costs and capital costs. Next up on Thursday is Reitmans Canada Limited with an EPS forecast of 19 cents compared to 16 cents in the prior year quarter. And finally on Thursday is Descartes Systems Group Inc. with an EPS forecast of 22 cents compared to 13 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.